Hey everyone, I'm Tom Thornton with Hedge Fund Telemetry, and today we are doing our bi-monthly short interest data webinar with Jeff Garbaz of Erlanger Research and Quantitative Partners. And it's quite a market, and the market is fading as we speak. It's Friday, April 29th. It's been quite a month. So let's just get started. This is our disclaimer. You've seen them before. And if you have any questions, please pause this if you're watching and read it over a few times. So with that, I want to give it to Jeff Garbaz, and we've done this before. Jeff, you could just go through just a little briefer, because this is an all subscriber webinar, smaller, and just go through the types of short classifications that Phil Erlanger created years ago.
Yeah,
so
and I'm actually going to do something a little different too with this. I'm going to just do a brief talk on this as well. So we've actually written about this. So if anyone wants to see it, we've expanded the traditional types from being one-dimensional to being three-dimensional. And so what I mean by that is these types which you're looking at are what we call our relative strength types. And then we have trend types. And the only difference between a trend type and a relative strength type is that the tech rank on the strong technicals, we don't include stocks that have a tech rank of 100%. And the reason we're doing that is when something is trending, we don't want to be buying when it's at its extreme, and it's proven to be pretty successful. So when we look at all our sector stuff and see a certain sector being led by, let's say, trending type ones, then we would know not to buy type ones that have a rank of 100%. And then the other thing is, like Tom, we're driven by wanting to be long stuff that's working and kind of short stuff that's not working. There is one exception. It's what we call the value type 1 and a value type 4. A value type 4 would have a tech rank of 100%. And so we would look at that as a potential really aggressive short idea, and then it would have no shorts in it. And conversely, if we have too many value ones, that would have a tech rank of only 10% and lots of short selling. So coming back to this core idea here, we're going to be mentioning that from time to time when we get those outlier type of situations. Like 2 weeks ago, we had it in the energy names before they kind of sold off, where there are way too many value type 4s, energy names that had a tech rank of 100% and had no one short. So kind of a nice little addition to the work. So our relative strength types are bread and butter. Type 1 short squeeze, doing well technically, lots of short selling on our intensity rank, and a short ratio greater than 1.5. And then a type 2 is also doing well technically, but it doesn't really have anyone short. And so the whole idea is if it's going to go up, it's got to go up because people are buying the stock. A type 3 are where the shorts are right and the shorts are making money. They're in stocks that are dropping and they're heavily shorted. And then the type 4, which is the best type of short actually in a bear market, are stocks that are weak technically and no one is short, because what happens is people go to cover those names and no one is short. They just continue to drop. And we're in a market now of low liquidity. So these things are working really great in terms of the work. So that's
so
kind
Jeff, so let me just speak English here for everybody and translate. I look at the type 1s and 4s, short squeezes for upside move, and a long squeeze type 4 for downside move. We've had a lot of type 4s in these mega cap stocks, and
absolutely
that's why you see some of these big pronounced drops, because you don't have the natural buyer, the short covering that can happen. So Jeff, why don't you take it over the screen and then go through your stuff, and then we'll get to some requests, and I have a few that I want to highlight as well.
Okay, great. So let's do a quick summary of short selling, what happened here with the latest data. This data goes from the end of March through the middle of April. And what's interesting about that period is the S&P fell by 5.06%. You can see up here, 329 through 412. And the next data that we get, which went through, let me think about this for a second. It was Wednesday, No, Tuesday. Sorry, excuse me. No, it was Wednesday. It was Wednesday.
So was that on 4/12?
Yeah, 4/12 through. So as it went through Wednesday's close, the S&P had fallen by another 5%.
Yeah,
So
so I'm looking at that right now. Yeah.
yeah, so it fell by another 5%. And we had tracked it that through the 4/26 date. I hadn't updated it yet for 4/27, but it's still lower and kind of struggling. What's interesting to me is there wasn't much addition. Remember, we're up a lot over the last year. New York's up like 19, and Nasdaq's up by like over 30% on a year-over-year basis. But so people are pretty well hedged on individual names. And we saw of the 24 sectors, 16 had an increase, and the average short intensity for every single name fell to 30 from 39.03, which is barely a drop at all. Interesting, only one major ETF had a big increase, silver. So shorts came into silver. We'll look at that chart when we go to looking at chart room and kind of drilling down on stuff. You can see what sectors are good in our work. Basically, the defensive stuff is at the top of our work. Food staples, utilities, energy. Energy is kind of it's not really defensive, but it's doing well because the price is up so much. Food, beverage, tobacco, real estate, telecom, commercial, and insurance. Insurance is defensive because people that are play the financials, they typically move into insurance names when financials are in a bear market because they got the higher yield and they tend not to move around as much. And what's weak in our work, consumer durable, tech hardware, interesting household personal products. That is defensive and it is not up there with the other things. So kind of interesting that's an anomaly. Media, software, autos, pharma, biotech, and semiconductors have just been sitting in the basement for a pretty good period of time here within the work.
Yeah, you've been spot on with semiconductors as a short from the highs, which was great.
Yeah, and it's starting to add more shorts to it, but we can't get the technicals going, and the put activity is pretty high too. We're just having a problem though with getting the technicals to start moving. So maybe that happens, maybe it doesn't. We highlighted utilities because we like utilities. They continue to remain strong. Although it's interesting, the average EVS Erlanger volume swing has turned slightly negative. Short rank's been going up. Erlanger commitment to short sellers still positive, which means it's dumb short sellers that are in. But a lot of sectors are just kind of having a hard time right now. Not many stocks are doing really well. And you can see that in the EVS starting to break down a little bit within the work. Fair number of names that are heavily shorted. So we got a lot of short squeezes still here. Watch and see how that plays out. Market commentary. You can see that was a drop 2 periods ago. That was definitely a decent drop. And there's the overall New York Stock Exchange compared to the absolute peak back there. But if we look at NASDAQ, NASDAQ's like at an all-time high. So shorts are actually pretty much monetizing the drop that's occurring in the NASDAQ stocks. And if we look at both the 3s and 1s off a peak, so not as much firepower there, still pretty good though. Type 1s hanging, but we don't have a lot of stocks that are strong technically. So that's why we're in that situation. And then here is the overall market short intensity. That was the low back in 2020. We've been climbing. We're not at an extreme. I mean, 07 was the epitome of being an extreme where we got the average sector and then the market above 50%. So that was definitely kind of a big deal. And what's interesting about this drop that we've been getting, I'm going to go into to chart room now, and we're going to take a look at a couple things. The most interesting thing to me is as we've been dropping, and Tom, you can see chart room now, right?
I can. Perfect.
Okay. So here's the most interesting thing that I am seeing, which is kind of a really surprise as we've been dropping, is the put activity on a sector by sector level has not been climbing. I would have expected with this week's action to be up like 10, 12. And you can see kind of at the March low, we were pretty high. At the January low, we were pretty high. At all kind of major lows, we've been kind of climbing. And if we go back to kind of prior period, look at where it was dead after we came out of the pandemic. We had nothing, and we've been climbing various times. So it's interesting to me that the excessive put activity is not really supportive of a potential bounce kind of coming here. So that's kind of a key thing that that I think is important to point out. Another key thing, which I mentioned, but I'll show it to people to see it, is our sector tech ranks are.
Yeah,
So
this is something I like a lot.
yeah, so look, we've got 5 sectors that have decent tech ranks, and look how many sectors are bad: 2, 4, 6, 8, 10, 12 sectors, and we got 5 that are good, and then a bunch that are kind of in purgatory right now. Interesting that food staples retailing, and look at that, type 1 percentage is 17%. So people are betting against these, and they're having a hard time. They're also betting against telecom and definitely struggling with telecom as well. Another way to slice this, which is kind of interesting, a lot of people have been talking about this, issues above the 50-day. Rather hideous, right, Tom? Look at that. Only 2 sectors that have more than half their names above 50-day moving average. And then issues above the 200-day, you add in food staples retailing. I like talking about 1 month high lows. Not a lot of new 1 month highs, not a big number. The lows, look at that, making new lows. I mean, a lot of 26% of healthcare equipment and services making new lows.
My data this last week, when we hit the lows, we had half of the S&P making a 20-day low, which in my opinion, that I like to look at 20-day lows as a factor. You know, one thing, Jeff, that on one of my monitors, the average ETF, and this has a couple, you know, defensive things in there. It's got USO and K-Webs and that, but it's down. The average above the 10-day moving average, it's now down 1.5%. It's down almost 3% on average below the 20-day and 2.5% below the 50-day. So that I would say on my monitor, and I show it every day on two notes, when the percent gets under the 50-day around 5%, that's when I think we're going to start to see some bottoming start to happen. But this is now you have the 50-day starting to move lower again as well. So that's another issue. In the 20-day going lower.
So an interesting setup for next week, which I want to make people aware of. I'm going to show this thing, but I kind of found this anomaly a long time ago in Phil's work, probably about 4 years ago, and I was like really excited about it. And I'm even more excited because it's continued to work. So the whole idea is to look at these periods where type 4s lose money kind of week after week after week. And so right now we've had 3 weeks in a row before this week where the type 4s had lost money. And that has happened. There's been a total of 39 observations over the last 12 years. And so 54% of the time after 3 weeks, you get a bounce. Average return is 3.13. So this is going to end today, and it's going to be 4 weeks in a row. Type 4s losing money. Then that goes up to 82% chance. And the best return comes after 4 weeks of the type 4s losing money. Now, what's interesting is it's not necessarily that you want to own short squeeze names. The worst names actually do the best. So this was kind of invented more for short sellers to alert them that, guess what? You're about to get clocked on the short side of your book. So watch out for next week. And if it doesn't play out, then the odds go to 97% the week after. But in certain ways, it kind of makes sense why next week could end up being a bounce week, given that you got the Fed on Wednesday. We may just, maybe they come across a little bit more dovish, et cetera. But it's an interesting setup to watch. And I know, Tom, I had one client who's a client of yours who's also a DeMark guy, and he was saying that certain DeMark signals are starting to kick in a little bit for a potential bounce. Do you see anything that could happen next week? confirm
No,
this?
not really. I think the concern that I have is that we have the S&P, the NASDAQ, and a few other indices and sectors that have downside sequential and combo countdowns in progress. And that's what really is concerning me. And that's an overall longer, a bigger picture thing. And now look, those can cancel. We've seen that happen in the past. But I think that I agree that the Fed could stoke a little of a bounce, get the big bad event out of the way. Oh, they're, raising 50 basis points. Maybe they'll sound a little bit constructive. I don't know, would they have any credibility anymore? But, oh, wow, they raised 50 basis points and we're still here. So you may see a bounce on that part. My concern is that we lose the lows and there's no support underneath. And that is a big concern for me right now. That's my big thing. So
yeah, it's a huge concern for me as well. The setup is there based off this. It's worked, but it may be, it may take until after week 5 to get it, or in theory, week 6, where it's only happened once. But this is interesting as well. This kind of supports what you're saying, Tom. We had this big move yesterday, and trend direction is a trigger indicator for us. You're either in uptrend, pullback, downtrend, or rally mode. So look at this. Here are the stocks that moved to uptrend after yesterday. Here are the stocks that moved to rally. But look at this. Pullback, not a lot. But look at the stocks that even yesterday moved to downtrend on trend direction. I was like, holy crap. Like a lot more. I mean, even with the move yesterday, it didn't stop the bleeding and the damage.
Yeah, I think you had a lot of it was you had mega cap stuff going up. You and I were talking about it the other day that, breadth wasn't so great.
Yeah.
It didn't rebound with the index, which told me basically the standard operating procedure by mega cap. And that's what worked until they reported earnings and, the bottom fell out.
Yeah.
Okay. So let's keep moving a little.
Yep.
Let's keep moving a little more, because I've got tons of stuff to do today and everybody else does too. But
yeah. So just real quickly, I want to show you one thing on the breadth you're talking about. This is in our weekly report. And then we'll go look at stocks. I'm done with my kind of comments, but this is a pretty cool data series right here. So this is the daily advanced decline line. This is a weekly advanced decline line. Then here are daily and weekly volume advanced decline lines. And then what I do down here is I take the daily advanced decline line and I run a 30-day exponential moving average through it. And so if the daily advanced decline line is below the 30-day, then it's red. Look at like we got, this was the rally basically from March 14th to the 29th. And then look what happened. We just fell apart again. And what's amazing to me, Tom, is back to July, like the market kind of turned on a dime, the broader market with the Russell 2000, Wilshire, et cetera. Brief period of positivity on breadth in August into September, and a brief period from October into the middle of November, a couple days beginning of January, and then that's it. So this just shows you how bad breadth really is. It's just hideous.
Yeah, I showed the advanced decline daily and weekly earlier this week, and I was actually surprised that it had not picked up. And actually, it's not lower. Actually, I should say the weekly's low, but the daily had not moved to a low level yet. So that was sort of a little bit of a mix there. I'm just watching a couple things right now on the SPYs and Qs. You have on the 15-minute charts, which is right here. I've got, if I'm looking over this way, I have screens here, all over, but we have buy setup 9. So now that's a positive for perhaps a few, next 45 minutes, we get a little bit of a bounce. It's holding the TDST levels, which is a great support level at 419.08 on the SPYs and 320.94 on the Qs. So if those break, what could happen is a downside sequential countdown will begin. And that could be let's just say, not a very pleasant afternoon for the long holders out there. But we're holding it here for now. So that's it. Sorry.
Any stocks you want to look at? I'm in our sentiment.
Yes. I want to go through a couple. Let's look at Amazon, because this is one that I've been doing these previews, as you know, and I think I get most of them right. But this is one that I'll tell you my analysis on it. I think this is why I shorted it yesterday. One, the short intensity rank had moved lower to 34, and that's the blue right here. Yep. And then the short ratio had also dropped to only 1 day, 1.06 days to cover. Now that was one thing, but if you go down, and this is one I really like, the Erlanger option rank. And when you see the red dots, that means excessive heavy call buying, and the green dots are heavy put buying, and you want to fade those signals. Now, this is the Nigerians are going to get on CNBC, and I know, Jeff, you're really big fans of them. But they're going to tell you that the smart money's buying calls on Amazon at the highs, and they're absolutely wrong. So you want to fade those types of things. But the main thing is it was sort of neutral at around 54%. And when I see it sort of neutral, and I know there's very little shorts involved, I thought there was, a better chance for this to move lower. So that was an anatomy of it. Another one I want you to look at is ABV. ABBV. Okay, this is another one that I highlighted, and this was a little bit more mixed. The short interest had been dropping, and you had some put activity up here in 77, but you still had those red dots, which at the highs, and I still thought that those could work off. I didn't have a trade on this one, but I figured it's not looking great from a technical point of view as well.
Hey, Tom, a quick thing just for people to understand too. Just because you got those excess puts there, you need the stock moving through the DMA channel. And you can see down here, this is our daily DMA oscillator. It shows when the price is above the DMA channel, which are these two lines right up here. So even though we got the excess puts, you can clearly see that when we were getting them, we're in the middle of basically technically being a struggle and a problem. So that's kind of a cool thing. So you don't take that and trade it if that's the case. So
yeah, I saw that as well, and it looked more like, if I had a gun to my head, I would have shorted it. So that's just that. Let's also look at one that Kathy Wood has blown herself up in, once again, Teledoc. I haven't looked at it on the system here. So again, shorts have been steady there, 7 days, 7.4 days to cover. And that's kind of high, but the intensity was under 50%. And the tech rank's been terrible. There was not that much interesting. The put buying was there at 70. I can see that 78% or 73%. And it's been steady down here, but nothing that excessive.
But these guys have been right, because you can see the DMA channel. The stock could never get through the DMA channel during this period.
It's just a mess.
What I think is so telling on Teledoc, look at this, Tom. The last time the tech rank was strong was off of that peak, which is, let's call it 300 to 250 in that range, and then it just disappeared. And even in rallies, all we could do was get back a couple times to 60%. So no green. It's amazing how that stock has just failed dismally from a technical perspective.
Let's look at Nvidia, please.
Trying to get in that week in that channel, but not there quite yet.
Yeah.
But again, the put guys have been right all the way down on this thing.
And the short ratio has been low
Oh,
for
it's a
quite a
vapors.
while.
It's
And there's
vapors.
less than 1 day, almost a half day to cover. That's not good. The put guys have been right. I think I traded it recently on the long side, that bounce. And now, and I got out nicely. I was very pleased with that. Let's look at Qualcomm. And this is one that I actually thought was going to go lower. I didn't short it, but I thought it was going to go a little lower. Although, just because there was a DeMark signal on the downside with it. I didn't do it because you had high, the short ratios higher at 1.93 days to cover. And there's been a fair amount of put buying, and that the put buyers have been right, and
Yeah.
short-lived bounces. So that's kind of where we are on that. Well, a little heads up on the buy setup 9. It looks like a sequential is starting on the 15-minute charts on the downside. It will be more or less confirmed underneath the TDST line at 419.08. And we are close on the Qs 320. Hold on, where is it? It's 320.94, and we're 25 cents away.
Okay.
Okay. So you're seeing a little bit of a bounce because you have 99% option rank. I was holding my rosary last night when they reported. I wasn't overly confident with that, but it worked out. I covered it earlier this morning. Take a little off. Okay, so let's keep going. QQQ.
Oh, lovely. I don't know why this thing's
This is actually a good example of looking at the option rank down here, the red dots and the green dots. And you have some put buying that's coming in at these lows, and I think that might be part of the squeeze we got yesterday. You see these sharp squeezes because the put buyers have to unwind and the option dealers have to unwind, and that's partly why you see the spikes. But you had the call buying at the highs, and that's
that nailed it big time. That was a nice call.
Yeah. And the short interest has not been high on the Qs and SPYs.
No.
Let's keep moving. BTU, please.
Just doing well technically, but no one really, shorted, nothing on the options. Just
You're starting to lose. I think I have some people that were really gung-ho on this.
As a short or as a long?
As a long.
Okay.
I think this got a little crowded on the long side. And you see there was a little bit of put or call buying on the spikes higher.
Yeah, I'm gonna just for kicks, let's just see how the volume looks on it right now. Let's see if we're losing buyers. Yeah, we're definitely losing a little. It's turned slightly negative, Tom. So the volume on our work has turned negative.
Okay, Tesla. I just had a friend ping me and say he thinks Tesla's going to turn negative late in the day. He's a good derivatives trader, so he knows where all the bodies are buried.
I'd go with that as a short.
Yeah, it's just so hard. I had someone that hit me up, and he's a new subscriber, and he said, look, I've got some out of the money puts, not the ones you did, but out of the money, and they're making money. What should I do? And I always say, well, take some off. It's Tesla. It can move wildly against you very quickly. So when you have gains in options in this market, take gains along the way. And that is the most important thing, especially with everything that I'm recommending or Jeff's recommending. Use your own risk tolerances. Don't wait. If you've got gains and you feel like taking gains, Don't be hard-headed. Take some gains. This
Yeah,
is the market.
Tom, what's really interesting about Tesla, look at, I'm gonna
Mhm.
make this bigger for everyone to see, but look at this tech rank, how unwieldy it is. It's very hard for a
Yeah.
stock to do this. Our tech rank looks over the last 100 trading days, and the most recent 50 get more of a weighting than the oldest 50. But look at the other history. You don't see anything like this. This
Yeah.
just tells you that this thing doesn't know which way it wants to go right now.
Yeah. That sounds like Elon Musk, if I've ever seen a chart that says Elon Musk. Okay, let's keep moving here. AMC. Goodness.
Slow bleed.
Yeah, it's a slow bleed. There's not that much. I mean, there's a little bit of shorts in there.
Not really.
Less than 1.5 days to cover. It's not going to be it's not the old days, people. We're going to get these giant squeezes. Yeah, there's a little put buying in here. The put buyers have been generally right. And the call buyers have been way wrong. If you look at those red dots, they come in
At the
at
peak.
the wrong time. Messy. Okay, let's keep moving. New subscriber would like to know EXPD. A little bit of a
little bit of
bounce
a
with
squeeze. Yeah.
I mean, look at the put buying on this has been just pegged.
Yeah, nailed it.
Yeah, this is actually one that I could see a squeeze. It's a type 4 still, or has it moved off of type 4?
It's out of type 4.
Yeah, it maybe it could get a little short-term squeeze here. Okay, let's keep moving. Autodesk, ADSK. I'm long this one. A little underwater, but
Shorts are there.
Yeah, that's kind of what I thought. The shorts, almost 3 days to cover. There was put buying. It's kind of neutral right now.
You know what I like over here, Tom, is the relative strength is starting to beat the S&P, and it's starting to beat the software sector, and it's starting to beat the application software group. So that's a bit of a positive.
Yeah, I need it a little bit further. And Alibaba. I will say I am so gun shy on the China internet names, just because they're up one day and they give it all back the next day. It's just so difficult, and China's manipulating them. So that's NetEase. Go back to Baba. So there's not much shorts. They're short. Well, that's the wrong one. BAB. Yeah. The shorts are not quite there at all. There was call buying at the highs, which there always is, and it fails. I'm more neutral on this. I mean, it could bounce, but it's just a tough one. GDX, GLD, IWM, Paramount, and TLT. And Disney, it's been beat down. I know. I like Disney.
Potential put squeeze.
Yeah. So first of all, we do have some. I bought it at, my averages is like just under 130, I think, and I bought it on the Netflix crush. Actually, I bought it a little before, but I think that the streaming aspect of Disney's downside is overblown because the parks are going to be packed this summer. If travel is going off the rails, well, I shouldn't say that. If it's going crazy with demand, which every airline CEO has said, there will be people going to Disney parks. So, and okay, so that let's do GDX and GLD. So here's the problem. Yeah. So you had all these when you see the call buying happening at the highs, it's not good. And I had at the highs of DeMark 13. I didn't take the trade. I just a little gun shy on that. I mean, there's shorts now, right?
Yeah.
It could squeeze. It could squeeze a little. Let's go to GLD. This is just, I hate gold and silver. It's just, they're such, unless they get into a really sustained trend.
Look at that though. People have come into silver in a pretty big way. They're
Yeah.
betting against silver.
Or the ETF. Okay, let's keep moving. Oh, Paramount.
What is that? Para, right?
Para. So this is the old Viacom. Look at the shorts have come in here. Actually, they've made money on this
Yeah,
move.
they've been correct.
Yep. Yep. They got this one. Still the cheapest media asset out there. The call or the put buying's been picking up as well.
Oh yeah.
So that's a positive. I'm holding this one. I believe if you're not in this one, you should own it. I want to hold this. I believe it is an M&A type target in some form. TLT, the rock in my shoe. Call buyers have just been, they're not there as much, which is, I guess, a positive. What this bond sentiment hit 5%. It's just obscenely low. This is I'm so mad at myself. Okay, team, TEAM. Well, shorts are covering.
Yeah, it's a long squeeze.
Yeah, yeah. So you see on the middle one there that red that's a type 4 long squeeze. And that's what's been happening here. The put buying's been steady. It's not that extreme. And you can see when it hit 100%, you did get a little bit of a bounce off the lows. So there's that.
Yep.
Okay, the QQQ is now below the TDST. Let's go to MDB. William.
Maybe the hope of a put squeeze now.
Yeah, little shorts have come in.
You know the name I
Don't
like
really
the
have
best,
much here.
Tom, in the tech space
Mm-hmm.
is CrowdStrike. It's a decent chart, and it bottomed a couple months ago, and the shorts are just betting against it.
Okay. I think they're also a big sponsor of the Mercedes Formula One team, and I'd be shorting the Mercedes Formula One team right now. It's so sad. Actually, it's better for the sport. DWAC. We talked about this one.
Yeah.
So this is the Donald Trump social media. So
apparently
not a lot of shorts there.
Apparently he did his first, I don't want to call it a tweet, but he did his first message yesterday.
Tremendous. Okay. Let's keep moving. KRBN. How much more do we have? If we don't get to all of them, you can hit me up later. Oh, this is the carbon ETF. Okay, that's ETFs don't have a tech rank, and so there's
but you can see down there trend direction is down. It's red.
What is the deal with the puts?
Yeah, it's just not, there's no liquidity. That's probably what it is.
Someone wants a white paper on how short intensity rank is calculated. So can we do that? We can do that, right?
Can we do what? Send down the paper? Yeah.
Yeah. Well, actually, what you should do, Jeff, is just send it to me, and I'll just post it on today's Daily Note.
Okay, sure.
Okay, waste management, WM. Maybe the best business of all time.
Garbage.
Garbage.
Which I have often been called over time.
Compliment sometimes for me. There's shorts involved, but it's just sort of steady. Maybe a little bit of put buying.
Let's do this. Let's see how the seasonality looks. Wow. Here we are right now.
Mhm.
That's only a little bit of weakness there, and it's up and to the right for the rest of the year.
Wow.
This stock has amazing seasonality to it.
Okay, let's keep going. PSA. We're gonna have to go a little faster here.
Short squeeze and the put squeeze, but it's dropped below the channel, so kind of not as much a put squeeze. I had this a couple weeks ago in our type screen, and it was performing really nicely. And then the triggers kind of said, well, we get a pullback, and that's what we're getting. So
Okay, let's look at FCX.
bounced off the 200, kind of a put squeeze now.
Yeah. Yep. Let's look at Shopify. Man, remember we were on something and we both said this is going to 500.
Yeah.
This was near 1,000.
Yeah.
We were wrong.
Bye-bye.
Very wrong. Hey, here's a pro tip. If you're Canadian and you have a company, you don't want it to become the largest company in the Canadian market. You can look back on Nortel Networks. You can look at BlackBerry. You can look at what was the Bill Ackman disaster pharmaceutical, Valiant Pharmaceuticals.
Yeah.
All those and Shopify had the esteemed privilege of being the largest company by market cap in the Canadian market. So congratulations. And this is what you get. So let's keep moving. CCJ.
Potential put squeeze after a bit of a drop.
Yeah, I think a lot. I was at the Real Vision macro experience, and everybody was hot and heavy for uranium. And this is right at the peak. And Jared Dillian said, you know, I like uranium, but I think there's a bunch of assholes starting to buy it now. I thought, oh, interesting. Okay, he's colorful. Ralph Lauren, RL. This is when I'm long and not so happy right now, but
you got a put squeeze potentially down here.
Yeah, I think this is a M&A thing, and there's shorts have covered. They covered on that big drop, and that drop was so curious because they got murdered on the Ukrainian the Russia invasion, saying that it's going to hurt Europe. I think that was an overreaction. An extreme overreaction. I own it around I think under 120. It's fine. Lulu, yoga pants. Ooh, look at that.
Shorts are
Short interest is ticking up.
They made it, and now they're giving it up, and we'll see if they cover. That'll be interesting.
Yeah, you know what? We talked about this one a few months ago.
Oh, we did.
Because the short interest was high, the put buying was there, and then wham, look what happened. The stock ripped. But we just didn't pull the trigger. WeWork, which I'm almost done with the series.
Similar to that?
WeWork. No, we. Yeah, there's not enough stuff there, but look at that short ratio is pretty high.
Highest.
I mean, that's what I actually bought this thing at like $5, and I sold out of it. I did fine, but I thought this was at the March lows, I think it was, and I thought, okay, I can do this. Let's play that. CRM, and then we're gonna stop. How about that?
Kind of a put squeeze.
Yeah.
No one short though. This thing is.
Yeah. Well, I mean, there's 2 days to cover. It seems like I was long this. I stopped out of it. You know, move on type thing.
Yeah.
It just couldn't do it. So that is what happens. Let me see if there's any more in here. Did we do Tesla?
Yeah, we did it.
We did. Okay.
Just a quickie. I'll hit on some. We do a screen every week. So these are our favorite lawns right now. This list will change next week. It's been doing pretty decently so far. And these are our favorite shorts for the week. This has been a good one. This intuitive surgical. Tom, there's one for your Ferrari. It's been a short.
Ferrari. I'll tell you, Ferrari's going to win I think they're going to win the championship this year. I'm just looking at it on mine. A lot of times when you get your short squeeze candidates on the upside, I'm getting downside buy signals because it gets exhausted. No, I see what you're saying in Ferrari. It's not a lot. Anyway.
But this intuitive surgical, let's do some longer term charts. Let's do file new works. Let's just simply do a monthly chart. Look at that. Like, so I like monthly charts right now because certain trends, like if they get broken, it's like, uh-oh.
Yeah, that's kind of what I'm looking at with
that's a little better monthly chart.
The S&P and I got one last one for you, Jeff. The percentage of type 4s.
For the whole market, right?
Yeah, versus the S&P.
Let's go weekly.
So look at that monthly. That just looks a tad dangerous.
It's problematic. I think it would be a good way to say that.
Nice way of putting it.
Let's do, okay, so I go to add Erlanger studies, I go to market, and I go down to market type 4s.
Right.
So we're only at 7% right now.
So this is a cool
indicator
that we've used in the past, and it used to get to around 10%, and that was a level that basically when you see that many type 4s, that says there's a lot more long squeeze candidates out there, and usually see that happen towards the highs and right before pullbacks.
Right there, got it.
No one got it.
Got it there.
Yeah. So, but that's interesting. It's at 7.
Yeah, not as extreme as we've been.
What's the lowest that it gets to?
Here's a problem. The way we look at data is that this is a daily chart, so it'll record it every single day. When we look at the weekly, it'll only take it at the end of the week and give us what the number is. And then when we go monthly, it'll just take it at the end of the month. So if it was higher during the month, we won't see that when we look at the monthly chart of it. So,
yeah, I think it's better on the daily or weekly.
Yeah, I agree. The weekly's pretty good.
Okay, that is it, everyone. Jeff,
thanks, Tom.
Thank you. We'll be doing it in 2 weeks, right?
Yeah. Have a good weekend.
Everyone. All right. Thanks, everyone. Talk to you.
Bye.